Hey, what's up, everybody? Good afternoon. Getting in the recap here for today. Shorter week, so we had another stream this morning. To be honest, we kind of expected price to continue this consolidation, right, with it being a Monday with no news. However, you see we've actually expanded up into now that daily swing point we've been looking for. So we continue to deliver into daily swing points, large range here today, and we were able to take advantage once we understood we were trending. But if we look on this higher time frame right now, right, we spoke over the weekend about the possibility of clearing this 1 hour bearish fair value gap. So if we can close above it, it'd give us the opportunity to use it as support. Right, we never close above it here, we close right on it. Notice that we finally do close above it. So now we can go ahead and use that as support, paired with still that daily volume imbalance. This level here is a new week opening gap. So we created a lot of discounts in here, which were able to propel us up and through, right? First, this high created last week, so last week's high. Ultimately, these are just higher time frame PD arrays that we'll talk about. And then this here was that daily swing point, so really the final target. Right, that's that daily high here. So we get up and into that, wick it, have a pair of new week opening gaps as well. But really the objective was the daily swing point. As we work down here to the 15, you'll quickly see, right, we run the short-term low here right after midnight. So we create the short-term low, we run that. So those are the stops being picked up for the morning. Right, we then create the power of 3 where we trade lower, break back above the midnight, tap that midnight one time here. Right, notice we have a fair value gap. So as we're leaving the 1 hour fair value gap here, we're engineering a 15-minute aligned with the midnight open. We tap that level perfectly, and then we accelerate, creating first a little false high. So notice how we engineer this buy side underneath this buy side that was created on Friday last week. Right, so we're engineering buy side levels near one another. That's kind of what we would want to see if price was going to expand up into that. On a 15-minute sense, we just come back into the 1 hour new week opening gap. We break structure higher, right? We return into this fair value gap here. So we don't even return into this one, creating that as a breakaway. Instead, using the most recent discount, breaking higher again, using it one more time. So just using the most recent discounts, extremely bullish marketplace. We're just going to look to use the most recent discounts formed. So that's this fair value gap, especially as we're breaking through a high. Bodies can't even get near that. We then accelerate all the way up and into that daily high. So only after hitting that daily high, getting into the new week opening gaps, do we then retrace just back into this range here. Our 5 minute, pretty similar, so we won't spend too much time here. One thing we'll point out is how we were utilizing this measuring gap here. So we took the swing low to this fair value gap, right? That's what we were using as our projections. And we wanted to see if we couldn't just continue to deliver. Right? So we had 1 that got hit, 2 hit as well, 3 reached, right? Notice how the 5th lines up perfectly with new week opening gap. We get into that. 4th would be in here as well. So just reaching for these targets. And it was nice to have that as kind of a measuring tool, right? Something to aim for. Suppose we could work our way down to the 1 minute now. Right, once again, this is the sell side that we spoke of. So we clear sell side before 8:30. We run that low. We're still holding the actual fair value gap. Notice that. We then at 8:30 break back above, tap that 8:30 once, and then continue to deliver higher. At 9:30, we were looking to see if we couldn't create a Judas swing to run out this low potentially. Right, this was a pretty shallow run on stops, so we were going to see if we couldn't get into this sell side and reach into this midnight level. Instead, you notice how we create a bearish volume imbalance and completely overtake that, while also overtaking this volume imbalance. So we had these volume imbalances here. This is also the daily volume imbalance, and we overtook this fair value gap. Along with, right, we have the new week opening gap level here. So the 1 hour fair value gap we're within, we're overtaking that consequent encroachment as well. So when we see this, at this point, we have really broken a lot of premiums, right? We're holding the discount. We've aggressively broken up and through premiums. So when we saw that, we kind of understood that more than likely this low was going to get left, right? We really were looking for more confirmation, however, and that came in the form of now leaving this as a breakaway gap and creating this here as a new measuring gap. So now as we took that same swing, right, and projected that out, we were using these as targets as well. 1, 2, 3, right? Notice how 5 gets hit and interacted with. But it just gave us short-term targets to use. If this was going to be a measuring gap, we would expect price to continue to deliver bullishly. So our first target was this short-term buy side, these equal highs created this morning. We wick into that first, right? Notice how we wick into it first, create equal highs, come back into the most recent discount in the form of this fair value gap. And then we rerun the actual buy side here. After running that buy side, we had left a 2-minute fair value gap here. That's what we were using, right? So that was overlaid. And we noticed that the counter bodies, after holding consequent encroachment here, continue to hold this 2-minute. So now if we're bullish, right, we can expect some short-term consolidation after this little expansion. But we were waiting to see if price would want to continue higher. So once we see price now, right, break through the premiums that was formed as we went into this 2-minute. So we had this first, we had a bearish fair value gap that held, delivered us lower, and we had this bearish volume imbalance. Well, after holding the 2-minute with the bodies, this candle completely takes over this, creating an inversion here, breaking through this high, and closing right on the volume imbalance. The next candle, once again, closes above, so breaking this premium, and then we actually close and break above these highs. So at that point, where I'm seeing this as a market structure shift, right, we've held the old daily buy side here. We're holding the discount in the form of this 2-minute. So now we're safe to go ahead and enter on a retracement back into the discount in here. So we were using the 2-minute paired with, right, this volume imbalance, also this inversion. Our entry came on the actual volume imbalance. So as we retrace into that volume imbalance, right, we're using the low of it. We had this inversion, also this pair of volume imbalances. So we felt safe with the stop just underneath that, right? Don't even need to be under the swing low. We hold the inversion perfectly. We then break structure here again, right? Continuing to push higher. We were looking at this fair value gap. That fair value gap holds us for the short term, and then we start breaking lower. All right, so at this point, our target here was this weekly high. So this was last week's high made on Wednesday. That's what this level is. So that's where we end up getting out. At this point, because we've hit that weekly level, right, we're wanting to see if we can give us some type of short-term just retracement that we can capitalize on. Well, we notice that after hitting that high, we create the 3 drives pattern. Right, so we spoke about that earlier with 1 drive, 2, and now the 3rd drive being formed. So we were looking for that original drive here. Notice how there's equal lows paired there now as well to be the next target. So when we break structure here at this low, leaving behind this premium fair value gap, right, we're okay to go ahead and enter short on that as we trade up into it. We sit in here a little bit, but ultimately, right, we get that delivery through this low and then ultimately this low here in one swift motion. Right, we break right through that, attacking that. So we attack the original low, which is also sell side equal lows. So for us, that was really all we had right in the morning. Played out nicely. We were content with taking it up, coming back down. We still, however, right, wanted to see if price would continue bullish. So now at this point, we had pulled up this 1 minute. So as we're breaking lower here, right, we're breaking through, this is a 15-minute fair value gap. Let me label that. Right, we had the 15-minute fair value gap here. We break through it, creating a bearish. If price wanted to go lower, this bearish fair value gap here should have held. So we're watching now as price overtakes that while creating a new discount in the form of this volume imbalance. And once we see price close above it, we're okay to now start looking for that continued higher prices. Right, so at least in the short term, this buy side target here. But we understand if we're going to negate this fair value gap, overtake it, we're going to create an inversion level off it. Right, we called out simply using the volume imbalance, stop below a swing low. Right, this holds us 2.5 handles as we would expect. And now we can target, right, buy side first. And now these levels here, this level here is a 1 hour fair value gap. So we were aiming for the 1 hour fair value gap. And then these two sets of lines are a volume imbalance on the hourly as well. And then this is another hourly fair value gap. Okay, so this is an hourly fair value gap high, a set of hourly volume imbalances, and then the hourly fair value gap low. If we were going to continue to push, right, it would make sense to reach up into these levels. And you see how once we hit that hourly, right, really where all these areas are overlapping, that's when we start to consolidate. So we've expanded, we've delivered into our targets, we're holding discounts. At this point, we're just really consolidate heading into the lunch hour. right? So we're bouncing off the hourly, coming back into, now this is another 15-minute fair value gap here. So now we're just bouncing between PD arrays, going from the hourly back into the 15, right, up into the volume imbalance, back into the 15, and then ultimately we tap that 1 hour fair value gap low to the tick perfectly. Right, once we do that, we give a retracement to run out now short-term equal lows that were created. So notice how prior to lunch we had created these equal lows, right, as well as relative equal lows here. And now during lunch we've retraced to clear all that sell side. You'll notice once we do that, we clear a short-term low, right? Notice what we have here, YouTube model. Short-term low cleared, break in structure. Order block level holds us. Right, look at the candles holding that perfect precision. All right, so we bounced there a few times. It's also the volume imbalance as well here. All right, so we get under additionally, still holding the actual mean threshold of this OB though. If we were to drag that midpoint out, never violate that, nowhere near it with the candle bodies. And then eventually we expand aggressively up and through the high into the hourly. And once we saw this, we really understood that, okay, price is bullish. Right, we have this daily swing high, that's our target, which is shortened trading week. So if we're going to do this, price is obviously reaching for something here, and it made sense to reach for that daily. So now we were just following price. Right at this point, we noticed once again the most recently formed discounts should hold us if we're bullish. So we're seeing is how we institutional order flow into this, hold that low, continue to push higher and higher. Right, delivery in here is pretty ugly. We were waiting for something obvious, and then that came here. So we're looking for higher prices, right? We're engineering a lot of lows, and you'll notice that we have created now this swing point with all these equal highs. So we've engineered buy side. We've now came down on this run lower to clear out sell side. Equal lows here, right? So we're running sell side equal lows while at the same time actually holding this fair value gap. Right, so we've cleared liquidity and we're holding at a discount in efficiency. We're already expecting price to continue higher. So we're just looking for something that gives us a chance to enter. That comes here as we run the short-term low, break the high, making that market structure shift, right? This is the YouTube model. So we have the YouTube model, we have the order block, right? We have the breaker. So all these discounts in here aligning with our understanding that price should continue higher. So now as we move this, right, as we come back into the order block, that's where our entry is, as it's paired with this fair value gap. So we get long. That's that second entry you see us share on Twitter. Now for us, we were just targeting 5 handles. All right, so we could have targeted the daily high, but because that was 7, right, we just wanted to go with low-hanging fruit. Be content. If that's 7, we can easily reach 5 if price is going to reach into it. So we were content with that. Right, at this point, once we create this and hold this low is protected. And you'll notice how now down close candles are supporting price. Right, so at this point, we're back into that bullish order flow. Down close candles will support price on the way up, leave a breakaway gap here, instead using the order block. Right, and now we continue to push up into that high. You'll notice how we create a volume imbalance before doing that. And we speak about how inefficiencies like this that get left open, once we deliver into buy side, we can return into them and find support. So only after this candle hits the buy side do we then retrace into this inefficiency, right? Hold there before attacking and delivering up into the new week opening gap levels. So from there, right, we were obviously super extended. Price went a little bit higher than the daily high because we had the new week opening gap. But at this point, we're just looking to see if price would give us some type of short-term reversal. And that's really what we get here. So now if you were to notice, as price trades up into the new week opening gap, we do create equal highs, right? We've spoken about how equal highs can sometimes be left. They don't always have to be engaged. We notice that the new week opening gap high is holding. And now as we first trade up into it, we have created this bullish fair value gap. So now this gets dragged out because this was the first, right, or most recent discount that's formed. As we break underneath that, that becomes important, signifying price wants to head lower. Right, we're doing that with a bearish volume imbalance. So we paint outside the lines a little bit. But now as we try one more time to get above, creating a new bullish, right, once again, we're trying to do the same thing, create a bullish fair value gap. And then that gets overtaken once more with now a bearish fair value gap. So you see how the premiums are really taking over, reigning supreme, right? We're failing to hold at the discounts and continue higher. And instead we're overtaking them while creating new premiums. So when we see that, right, this bearish fair value gap overtake, create an inversion here. Also, as we're heading really into, right, the close of power hour, we can expect a retracement into the range. This is the market tipping its hand. We're going to use that inversion volume imbalance as we see, right? Or excuse me, it's just the bearish. So we use the bearish volume imbalance paired with the bearish fair value gap. Right, if I was to pull up consequent encroachment of the new week opening gap as well, look at that, right? So just beautiful precision to see. Ultimately, we hold that setup, break underneath the new week opening gap, and now we just really retrace back into this range that was created here, right? So we can take this low, if we were going to use the institutional order flow entry low, up into the high of the day, right? Notice how we return into equilibrium, spike back into it, and then as we close off the day, close right on that level. And as of now, still kind of playing around it. But overall, right, surprisingly, clean delivery today. So we started the day off with the expectation of consolidation, but once we understood that we were, right, just not correct in that idea, and that price was going to go ahead and trend for us and reach for something, we had no hesitation hopping in when we could. Taking it up first, reversing lower, and then ultimately capturing it up into the daily high. Going forward, still bullish, okay? So like we spoke about here, really all the way down here. Expansions will lead to consolidations, which will lead to expansion, which will lead to consolidation. Right, sure, sometimes reversal, but for us, we are still looking for higher prices, so we expect continued expansion. Right, we've cleared this daily high. We want to see this one here. So we have this as a kind of our next target. That daily high would be nice, right, on the 4-hour sense. This swing high here. So a few different targets, but nonetheless, we would like to see price continue higher. Heading into tomorrow, let's see, we've already retraced. For us, right, we do have this fair value gap here. So I'd be okay actually seeing price if it wants to dive a little deeper, give a deeper retracement. Coming into this, holding, right, this is where all the hourly levels are at, hourly volume imbalance, hourly fair value gap. Just so you can kind of visualize it better, right, I'll show you exactly what we mean. So all these levels here, right, so we first had this hourly fair value gap high, the hourly volume imbalance, and then this new hourly fair value gap here. We obviously got up and through that, but if we were to come back down and revisit that area, we would expect it to offer us support. So yeah, going forward, we'll just look for the continued higher prices. Not in a rush to do anything here with this shortened trading week, but we'll still see nonetheless. Tomorrow we'll be here at, let's see, we have high impact news at 10 Eastern. So we'll start a little bit later than normal. We'll have the 9:55 start time just before that high impact news, and then we'll sit around for the next hour and a half or so. So until then, have a good night, everybody, and we'll talk in the morning.